Hey everyone, welcome back to Corporate Decoder, where we unpack the secrets hidden in plain sight within corporate filings. And today we're looking at QT Imaging Holdings Incorporated's latest announcement, which involves a rather significant change for shareholders. A stock split that is more like a reshuffling of the deck. So stick around to see what this really means for the company and for you. Before we dive in, if you like getting these unfiltered looks into company moves, make sure to hit that subscribe button and ring the notification bell so you never miss an episode. Also be sure to join our Discord community linked in the description below for more in-depth discussions and early access to analyses. Alright, so what we have here is a current report from QT Imaging Holdings Incorporated filed on the 24th of October 2025. The big news is that on this very same day, the company announced that their 3-for-1 reverse stock split became effective. Now, what does a reverse stock split actually mean for a company and its investors? Think of it like this: instead of having, say, 300 individual dollar bills for a company, they decide to exchange them for $150 bills. The total value remains the same, but the number of individual units decreases. Companies typically do this for a few key reasons. One of the most common is to increase the share price. Many stock exchanges have minimum price requirements to remain listed, and if a company's stock price falls too low, it can be delisted, meaning it can no longer be traded on that exchange. Another reason is to make the stock appear more attractive to institutional investors. Some funds have rules that prevent them from buying stocks below a certain price. So for QT Imaging Incorporated, this move suggests they were looking to boost their stock price. We see that their filings are marked as an emerging growth company, and they are using the extended transition period for complying with financial accounting standards. This essentially means they get a bit more time to adopt new accounting rules compared to larger, more established companies. The core of this filing really boils down to that reverse stock split announcement. They've essentially consolidated their shares. So if you owned 300 shares before this split, you will now own 100 shares, but the value of those 100 shares should theoretically be 3 times the value of each individual share before the split. The important question is whether this is a sign of fundamental strength or a cosmetic fix for underlying issues. The press release attached as Exhibit 99.1 titles QT Imaging 3, One Reverse Street Split Market effective on the 24th of October. 2025 spells out the details of this action. By consolidating shares, QT Imaging Incorporated is aiming to present a more robust share price moving forward. This action is often seen as a step to regain compliance with exchange listing requirements or to enhance the perception of the stock's value. Now let's look at the bigger picture for QT Imaging Incorporated. While this report doesn't contain detailed financials like a quarterly or annual report, it is a signal. A reverse stock split can sometimes be a precursor to further corporate actions or an attempt to make the stock more appealing. However, it doesn't inherently change the underlying value or performance of the company. It is crucial to remember that the stock price itself doesn't change the company's revenue, its profits, or its market share. Those are the real drivers of value. The challenge for QT Imaging Incorporated will be to leverage this new share structure to improve investor confidence and potentially attract new investment. If the company's business operations don't improve alongside this stock adjustment, the boost in share price might be short-lived. Looking at QT Imaging Holdings Incorporated, and this reverse stock split, I see a company trying to put its best foot forward. The strength here is that they are taking action to remain listed and potentially appear more attractive. However, the weakness is that this action alone doesn't fix any operational issues. The real test will be if QT Imaging Incorporated can now execute on its business strategy and deliver consistent growth. A significant risk is that without a corresponding improvement in business performance, the higher share price may not attract the intended investment and could still face downward pressure. The opportunity lies in using this refreshed stock presentation to build momentum. My conclusion is that while the reverse stock split is a necessary technical move for QT Imaging Incorporated, it is merely a step in a larger journey. Investors should focus on the company's actual operational performance, revenue growth, and profitability to truly assess its long-term prospects. Alright, that is our take on QT Imaging Holdings Incorporated's latest filing. What do you think about this reverse stock split? Does it signal a good move or just window dressing? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more straightforward corporate analysis. And don't forget to join the conversation on our Discord server, linked in the description. Thanks for watching Corporate Decoder, and we'll see you in the next video.